What's up, guys? It is Monero Mateo. How you doing? We're going to talk a little bit about a tax loophole that could be used by you Bitcoin hodlers and all of you guys who invest in cryptocurrency who don't know much about taxes to save a little bit on your taxes when you file your tax return. And by the way, just as an aside, a lot of people in the crypto space don't know anything about taxes. This is very dangerous, especially given that these are public blockchains. And this is why I'm a big advocate of privacy coins. I'm a big advocate for getting off the grid, so to speak, when it comes to the crypto sphere. But it's too late for a lot of people because they have been transacting in these public blockchains for a while. And the IRS is employing analysis firms like Chainalysis, TaxBit, in order to figure out what people are doing with their funds. And if you don't properly file your taxes, I suspect they will come after you, just as they've come after tens of thousands of people in the last few years. So report your taxes, pay your taxes, and when you do pay your taxes, remember your capital losses, because you could take up to $3,000 as an individual for your capital losses if they are more than your capital gains. And if you have a lot of capital gains because you're a successful crypto trader, make sure you report your capital losses. And what we're about to go through here is going to help you get more losses so that you could offset more gains and have a lower tax bill to the IRS. Which, interestingly enough, when you spell out the IRS, it's theirs. So, a pretty morbid joke. We don't like them. So, a tax loophole is helping Bitcoin holders save tons of cash by avoiding federal taxes. Avoidance of taxes is legal. Evasion of taxes is not. Big difference. So we're going to talk a little bit about something called wash sale rules. So with cryptocurrency tokens like Bitcoin and Cardano and Ethereum, you don't have to be subjected to the wash sale rules. Now, if you don't know what that means, when you buy a stock, for example, and you buy it for, say, at $100, ABC stock at $100. If it goes down to $50, okay, and you sell it then, you get a $50 loss that you can take against your capital gains, or you can just take the loss, lowers your tax liability. That's great, but you cannot buy that stock within 30 days, because if you do that, the IRS is concerned that you're harvesting losses. Because if you just buy back into the stock, you still get exposure to the stock, but you have just claimed a loss. So it makes it look like you're just trying to lower your tax bill. And so what they then have you do is that loss that you would have otherwise claimed, they add that to the basis of the stock that you purchased within 30 days. And if it's a similar stock even, they will make you do that. So you don't have to do that with crypto tokens. And in that last example, your basis would have then been $100 because you bought it at $100, you took a $50 loss, you bought back in within 30 days. So if the stock then goes to $75, okay, you can't take the $50 loss in your tax return. Your basis then becomes 100. Let's see, 75. Yeah, I believe it becomes 125 because the loss then gets added to the basis, right? So then you can't claim the loss. You can only claim it later when you actually sell it for good and you don't buy back in. So this is something that is very useful if you're looking to claim losses. So we're going to talk a little bit about that. This nuance in the tax code is absolutely huge for crypto holders in the US. One thing savvy investors do is sell stock or sell at a loss and buy back Bitcoin at a lower price. You want to look as poor as possible. Agreed, right? The more losses you can rack up, the better it is for the investor in the long run. You can harvest an unlimited amount of losses and carry them forward into an unlimited number of years. I think this is the case if you're a company. Now, if you're an individual, I would look at that. Let's do some research first. Capital losses for individuals carry forward. Because I know for corporations, C corporations, you can carry them back 3 years and forward 5 years, but it depends on so they can be carried forward into future tax years, right? So you can use a maximum of $3,000 this year. because the wash sales because the wash sale rule doesn't apply, investors can harvest their crypto losses more aggressively than with stocks. And this could be, for some corporations, why they're getting involved. Because if you could lower your tax bill strategically with cryptocurrency and also get exposure to a very volatile currency, which has had just spectacular gains over the last, few years, it could be a pretty smart idea to get into it. And you look at MicroStrategies, right? Michael Saylor's company, MicroStrategies. He's all in on Bitcoin. And, he's taking out massive debt. He's selling many bonds, taking massive debt to purchase cryptocurrency. And it's amazing he doesn't have to abide by the wash sale rules because he could harvest losses. That helps him offset a lot of the gains that he's getting in Bitcoin, even though I think his average price buy-in for Bitcoin is about $25,000. So, yeah, he's made okay. But it's a pretty risky business, dude. I don't know. I see people doing this every month, every week, every quarter, depending on their sophistication. You can collect so many of these losses. Accruing these losses is how investors ultimately offset their future gains. And yes, you can offset future gains because you can carry it forward, which is fantastic. So here's an example. Let's say a taxpayer purchases one Bitcoin for $10,000 and sells it for $50,000. This individual would face $40,000 of taxable capital gains. But if the same taxpayer had previously harvested $40,000 worth of losses on earlier crypto transactions, they could offset the tax that they owe. So this is a very smart idea. This is a very smart idea. And so this is why, as he says right here, if you're getting involved with crypto, and we just did a video recently about Kraken, Circle, and other crypto exchanges now being subpoenaed by the IRS for a lot of the records of their clientele. And the IRS wants to know what you're doing with their cryptocurrency. And if you look at the infrastructure bill, they anticipate raising $30 billion over the next 10 years from people involved with cryptocurrency. And they're going to get those taxes. They're going to get those taxes. And even though I suspect most people in the cryptocurrency space don't know anything about taxes, how to even pay their taxes, because a lot of these people aren't even like 18. They're just buying Dogecoin and getting rich, not paying estimated taxes, not paying the capital gains taxes. They're going to have big penalties, and they're going to have big bills coming in the mail. And they anticipate raising a lot of money from that. And if you want to be safe when you trade public blockchain cryptocurrencies, and I must say privacy coins, even though they can't track those, you have to keep good bookkeeping. You have to be writing down your entry points, writing down your exit points, writing down your gains, writing down your losses. This is very important. This is very, very important. And I think that there are apps that you can get now that make that easier for you to do. But I would do it yourself. I would just be mindful of this. Whenever you trade your Bitcoin for another cryptocurrency, that is a taxable transaction. Write it down. Whenever you buy a pizza with your Bitcoin, that is a taxable transaction. Write it down. Okay? So that is something I wanted to share with you. This is a good article right here. And they talk about TaxBit, making it easy for you to harvest your tax losses. Oh, I'm about to lose power. So I might have to wrap this up. It's raining outside. It's storming pretty hard. And I'm not going to be able to use my Bitcoins. I might lose my power. So I might end the video here. But in case you want more information on this, this is a good article written by the folks over at TaxBit, which, by the way, are working with the IRS now in order to track people's wallets and their transactions and everything like that. But nevertheless, at least they're trying to help you reduce your tax bill that you're going to get in the mail because of TaxBit tracking your cryptocurrency activity. So that is some good stuff. So it's a short little video. If you need anything in regards to crypto advice in the realm of taxes, if you want to know how to pay your employees, and fulfill your payroll responsibilities with cryptocurrency, please come to me. We know a little bit about that. If you want to have some bookkeeping services done, come to me. And something that I've been studying recently, which I'm going to be making videos about, is how it is criminals use Monero, Pirate Chain, and some of these other privacy-based cryptocurrencies that can't be tracked or traced in order to bypass the tax system. I think this is an interesting academic field which is going to become popular. I don't advise for people to be criminals or to use Monero or Pirate Chain to bypass the U.S. tax system, but I'm just saying that criminals are going to, and they're going to be able to do it successfully because you can't track or trace these coins. And so that in and of itself I think is bullish. Speaking of which, let's check for a moment on how our privacy coins are doing, because Darrow was doing fantastic. And if you don't know what Darrow is, it's basically like the private version of Ethereum. They do smart contracts, and it's a ecosystem that other blockchains can be built on top of, other services. Trade Ogre, we love Trade Ogre. It is a website probably based somewhere in the Caribbean or somewhere in Mordor. I'm not sure. So we're seeing a little bit of a dip. I mean, we were up significantly yesterday when a lot of tax news is breaking out. But it looks like we're having a little bit of a dip again. So anyways, it was good speaking with you guys. Again, this is Monero Matt. And if you're interested in any services I can provide for you, please contact me at my email. Please follow me on Gab also. I don't use Twitter. I don't use Facebook. I'm off of those totalitarian censorship dystopian hellscapes run by you-know-who, which I think, by the way, Jack Dorsey is into Bitcoin, which is sketchy to me. But we have more content coming soon. I'm working on a video right now about the lockdowns which are coming. I think people are in disbelief about this. Everybody that I talk to, they're like, no, they're not going to lock things down again. Of course not. Oh, they will. And they don't care what you think about it, because the Federal Reserve needs another excuse to pump trillions of dollars of liquidity into the system in order to prevent an economic collapse. That's the situation that we're in. Anyways, we'll end on a positive note. Have a wonderful day. Have a wonderful weekend. And glory be to God.